What's going on, everyone? Today is April 12th, and I'm going to do an in-depth look at mortgage rates and why they're going up so quickly, as well as the impact it's having on the housing market, which surprisingly is very little, but there's a reason for that, and I'm going to show you why. So this will be a little bit longer of a video, but it's going to give you a deep look on where we are, because if anyone is saying that they think they should wait for rates to go down or they want to hold off on buying, I think it's a mistake. So we'll jump straight into the details. I'll show you why, and hopefully this gives you some insight. Here we go. Okay, so this isn't the first time you guys have seen this chart. We're looking at mortgage bonds trading here. This is a behind the scenes look. This is not publicly available information. So I'm showing you how mortgages are trading because that is what impacts interest rates. A lot of people think that when the Federal Reserve raises rates, that is an immediate impact on mortgage rates. That's not how it works. What happens is when we get the announcement that the Fed is going to make changes, the market reacts immediately. What I try to compare it to is if Elon Musk tweeted today that he was going to have horrible losses at Tesla come July and lay a bunch of people off, would you sell your stock now based on what's coming, based on his announcement, or would you wait until he actually did it? Everyone reacts to the news. So when the Federal Reserve lays out a plan of what's to come, mortgage rates have already adjusted. So these Fed rate hikes really don't have a dramatic impact in that exact moment that it happens because we've already accounted for it. And you have to remember, there's a handful of things that have come together that have made rates rise. So we forgot where we came from. The reason rates went down so dramatically was in March of 2020, the Federal Reserve started investing in mortgage bonds and treasuries to stabilize the economy. Everything was sideways and it worked really well. But we saw interest rates go down anywhere from 1 to 1.5% basically overnight. So now, as interest rates have risen over the last 3 months, really from January of this year through current, interest rates are up about 2%. And everyone's going, why are they going up so fast? We forgot they came down so fast. So where we're sitting today is not really a high interest rate. We're right back where we were pre-pandemic, and I'll show you how that works. So again, this is the last 3 months. You can see where we're sitting here. We're sitting right on this 100 basis points line. Now, if I go to a longer time frame, we're going to go all the way back so that we can really see some depth here. Okay, so now what we're looking at is basically 5 years back, and you can see this low point. Remember, low is bad, right? Down is bad, up is good. So you can see that we are basically back to where we were in the fourth quarter of 2018, and we're holding there. And when I saw us get to this point, I was really hoping we'd stay right in this range, and it looks like we're starting to, but it could still change. Now, here's what's really interesting to me. Back in the fourth quarter of 2018, when rates went to these levels, we saw the housing market come to a complete standstill. I remember real estate agents calling me that used to brag about not working with buyers. They only worked with sellers. Well, now they were calling and hating their life because they were doing price reductions and their clients didn't understand why their houses weren't selling. Well, it was really interesting to me because everyone up to that point was saying, I want to buy a house, but it's just too competitive. And then this window of opportunity opened where people got scared and pulled back, and everyone said, well, if no one's buying a house, then I'm not going to buy a house. And you missed a huge opportunity. Imagine if you could have bought the house that you're looking at today back in 2018. Prices were far lower, and even though they bought with higher interest rates, say in the 5s, they refinanced through the pandemic, and they're probably sitting in the 2s forever until they sell that home. And they've also made a ton of appreciation over that time. So that's why I say don't really focus on the interest rate because it's a means to an end. If you buy a house today and rates go up after that, you're very glad you bought when you did because you have a lower rate than where the market is. Now, if rates go down after you buy your house, you just do what everyone did through the pandemic and you just refinance. So there's always an opportunity to get to a better place. Okay, so all that being said, why isn't the housing market coming to a standstill? Why are we still seeing double-digit offers on homes? I had one that was 2.5 weeks ago, 35 offers on a $2.5 million home. So why are we still seeing this if rates have moved so much? Why isn't 2018 repeating itself? And what it really comes down to is birth rate. And what was great is Barry Habib did a video with me in 2020 saying that you're going to see prices continue to rise regardless of interest rates because of the birth rates that were happening. Millennials make up 47% of home buyers right now. I'll show you an article from the National Association of Realtors that speaks to this. Here's the article from National Association of Realtors. Key highlight, millennials now make up 43% of home buyers. Now, why this is important, and this is exactly what Barry said in the interview I did with him. He said there's more and more people being born between 85 and 90. And I'll show you a chart of birth rates. So what we're seeing is we have millennials already being the biggest home buying group in the country. And then we have more of them being born and coming into the age of being a home buyer sooner. at the same time that we have no inventory. So the difference between now and 2018 is there is more demand than there's ever been because people are now of home buying age, and we have less inventory than we've ever had because back after 2008, builders didn't build at the same rate they were. And now on top of that, we have supply chain issues. I've been talking to home buyers that are looking at buying new construction. It could take 18 months. A new house used to take 6 to 9 months. Current turn times are being quoted anywhere from 12 to 18 months, and we're seeing delays. So you have this supply chain issue creating a huge lack of supply, and then you also have more demand than you've ever seen. Look at the chart. All right, so here's a chart of birth rates in the US. I just went back to 1980. I was born in 81, but look at the line. There was more and more up until about 1988. And then it levels off, but not by much. You get into the late 90s, the early 90s, and then we see a decrease. So that means that more and more people are going to become in their 20s and 30s and be of the age to start buying homes. That in itself is going to create more and more demand. So all that being said, is this a bad time to buy a house? Not at all. I would jump on it because you're also hedging yourself against inflation. The beauty of using a 30-year fixed mortgage to buy a house is your monthly payment will never increase. That means as the cost of homes, the cost of anything goes up, your monthly payment remains the same. So you're fighting inflation by using that. And at the same time, the market is appreciating. Remember, inflation makes everything more expensive, including houses. Inflation alone will drive up the value of your home over time. An example I always give people is my grandparents bought a house in Silicon Valley for, I think it was $45,000 in the 70s. And that same house would sell for $2.5 million now. And so we say, oh my gosh, how lucky were they to get homes at that price? Well, it's the same grandparents that told me a candy bar cost a nickel. Candy bar is now $2. So they were in the same struggle we all are, trying to put together money to buy these homes. $45,000 was a lot for a house back then. Just like the prices we're seeing today feel like a lot. But remember, the cost of anything you look at compared to what it cost 10, 15, 20 years ago, everything is more expensive as a result of inflation. That is why real estate wins over time, and that's why it's a great investment. And when it comes to interest rates, remember, don't worry too much about them. Of course, make sure you can afford the monthly payment, but if rates improve after you own your home, you can always refinance. And if rates continue to rise, you're glad you have what you have. I hope this was very helpful. Reach out to me, comment below, let me know what you think. Love to chat about this and make sure that I bring you guys as much value as I can and put your minds at ease as much as I can. So thank you again. I'll talk to you soon. Cheers.